Hello traders, the title of the video is Wave Trading Education Part 3. If you have not watched Part 1 and Part 2, you may do so before watching this video. Let's get started. So in the previous video, we have learned few things, tips and tricks about wave trading, what a professional are doing, okay? So we will continue with this free educational video about wave trading, alright? So professional highlight the 50% and the 61.8%. Let's remove our lines and go through everything else again, alright? So we have seen that from this point, okay, all the way up here, we have counted 5 waves. Very fast, like a child, we counted 1, 2, 3, price went down, price went up, price went down, price went up. Like a child, we did count the wave, alright? So that's all we can see on this chart right now. We are just going step by step, because when you are counting wave, just go step by step. Do not assume anything. Just go make it very simple. Cut all the nonsense, cut all the complication. Our goal is to simplify the wave principle without diluting it. Alright, very important. So, professional, after they count 5 waves, they will highlight the 50% and 61.8% Fibonacci retracement level. I'll put those lines back again. We want to discuss now in this video few mistakes that even the smartest traders are making. So you can understand why people make mistakes. What usually takes place after traders make profit, they are very, very excited. They are very, very happy. The mood is very high, okay. The tone is very high, okay. And they are very, very confident. But in trading, there's nothing like confidence. It doesn't work in trading. If you ask Goldman Sachs or you ask JP Morgan, hey, they are not excited. They are more excited about risk control, because 1 minute you may see something else. All right. So traders are watching the price as the price coming near this zone. All right, the 50% and 61. Some traders call it sweet spot. There's nothing sweet about it unless the fundamentals are sound. So because traders manage to catch the third wave, they make a lot of profits, and the champagne, okay, they were enjoying themselves and very happy, and they managed to catch even the 5th wave, and they make a lot of money, and they predicted that the price will pull back to the 50%, 61.8, so they make money, a lot of money again, pulling back down again here. Now here they want to buy again, because so far it's like they are the expert for Elliott wave, and they are making a lot of excellent decisions. So they will place a trade here to buy. Nothing wrong with that. Sometimes trader will take calculated risk. All right. So they are willing to give back some profit. So they take a risk. If it works, it works. If it doesn't work, okay, they will minimize the risk. Some trader will go big time and buy here. It's a mistake. Nothing, repeat, nothing is guaranteeing that the price will change direction here. What you should do, as the price comes to these spots, be very, very patient and calm, because anything can happen, all right? You want to check the S&P 500. Doesn't matter whether you are India, all right? You are in Singapore, you are in Japan, wherever you are in Canada or wherever, United States, doesn't matter, in Africa, wherever you are, okay, in Belgium, all right? Just check the S&P 500, which we call the market. Is the S&P 500 starting a new bullish cycle. Use what we call the wave count by comparison. We are looking at this stock, okay, Pfizer, very difficult name for me, Epic PFE, okay, Papa Foxtrot Eco, all right, and it's listed on the Dow 30, and you want to check other stock by comparison. Check the Dow 30 index itself. Check the S&P 500. Is the global economic condition has improved, all right? And also go to Google Finance, go to Yahoo Finance, do the due diligence, all right? Check the cash flow, check the competition, check the management, all right? Check the sector, all right? And do a bit of verification. It's not technical alone, all right? Because a lot of technical traders will lose money here because they just playing technical alone. Check the economy news. All right. Once you are satisfied that, okay, in fact, the global economy is still good, everything remains intact, okay, the market is still bullish, all right, don't rush, all right, don't be the first person in. Because if a new cycle is about to begin, you can be patient and catch instead the third wave, all right. You can be patient, all right. So this is it about this point. As you can see here, traders were aggressive and the price pulled back here. Why is another thing you need to remember here? As the price pulling back to this section here, you want to check also the fair value of the financial instrument that you are trading. Pay attention carefully. This will make you a better trader. You want to buy something, you want to buy quality. Not only that, make sure it's first you want it to be quality, talking about return on capital. That's how we select a good company, higher return on capital. That's about, okay, quality. Now, you don't want to pay high price for it. Buy cheap. Buy something that is quality at the best price, below its fair value. We use something that we call the smart median line. The smart median line is the technical fair value of a financial instrument for 5 years at least. If you are lazy, you can use that. The next thing that you want to use is the net asset value. All right? Compare, okay, the short-term liability, all right, of the company, all right, and the cash flow. Are they able to pay their short-term debts? If a company cannot pay, it's not making enough money to pay their short-term debt, don't bet on it that it's going to go up for long. The smart money will flag it out and sell it. So, this is so important because the smart money now, if the smart money know that this company is very, very bullish, as they did with Facebook stock, they sold it only to buy it, all right? So, they want to buy, the price must go down fast. So sometimes the price reach this level, so you also want to buy, but don't be the first person. Wait for the smart money to start buying first. So the smart money they want to buy here. They say, no, we don't want to buy 60%. We are not ordinary traders. We are smart traders. We would prefer to buy instead of 78%. So some investor, pay attention, even some hedge funds, we always buy a stock that are blue chips, what we call blue chips, food stock that listed on the major indices. When they see a stock that is has a high reputation, that is discounted up to 78%, there is their investment strategy. They will just buy it and hold it for long term. That they do it all the time. Some pension fund will advise their broker to buy any stock, the blue chip stock that listed on the major index, CAC 40, DAX 30, the Dow 30, NASDAQ 100, all right? So these kind of stock, they will, FTSE 100, all right? Nikkei 225, these are stock, if they are discounted 78%, and their management is still in place, their future is still bright, they will just buy. So as the price reaches this level, do not rush too much. The smart money may force it to the 78%, as you can see here, and before buying it. Technically speaking, you can just draw the common sense trend line and be very patient. Look. So buying below the bearish trend line is not the right way forward. Here we have to use a top-down trading method, which means price break above it, you see here. So once you see above it, we can switch to another time frame and break it down, and select a low risk entry point. As you can see, price was coming here like this. All right. Another thing that we, as talking about, all right, GST traders that are following us know about the smart media line. You can see the first candle here, which is this one here. I've been talking now a bit too long. That's not my intention, but these are very important subjects. Talking about wave trading, part 3. Combining the technical and the fundamental, paying attention to other market participants without rushing to avoid, okay, wave trading mistakes. All right, let's continue. So you can see the first candle that truly came above this blue line, which is the bearish trend line, is this one here. So we can just wait and watch it. So at that point in time, I'm going to show traders something they can do using what we call the small median line. So the price did open here where my cursor is. I hope you can see right here, and then went up to this level. So we were here. We will use the smart high and the smart low of the last 5 years. This is 2011. Okay, so beginning of 2011, we will draw the low. All right. So 1, 2, 3, 4, 5. The highest point for this 5 candle. Beginning of 2011, we were here. So 1, 2, 3, 4, 5. All right. And then we will highlight also the smart high. I don't want to dwell on this. Okay, so I will color those line now into pink to please the beautiful ladies that are following us. In fact, ladies can trace better than men. That's what I noticed. So men, do not be discouraged. All right. Okay, so let's move on with serious matters, talking about wave trading. So now we see, so we will use, you see, we highlight the range of the 5 candles, beginning of the year 2011 right here. And we will draw also the median line, okay, of the range of these 5 years candle, bringing us roughly, I'm just drawing it roughly here. Okay, and I will color in blue. Okay, so men, be happy. All right, this is your color. So here, you see, so in fact, you see, this is a beautiful setup in 2011 for this Perfizia American stock listed on the Dow 30. So we will switch to another time frame, all right, and monitor the activity around the small median line, which I put here as a blue horizontal line. To avoid that the video is too long, I will stop here and invite you to follow me in the next part of the video that we will call Wave Trading Education Part 4. I hope you have enjoyed this video about the Wave Trading Education Part 3, and we put into use to make excellent Elliott wave decision. Until the next time, enjoy yourself and be very happy. See you in the next video where we will discuss Wave Trading Education Part 4. We are the TSTW SYS 008 traders.